Hey guys and girls, hope everyone's doing well. So this video here is just an example of everything that we have spoke about into TTF 2.0. And the reason for doing it is I just want to show you a live trade. So this was a trade from yesterday, EURUSD longs. Now, as you can see, actually that trade could have gone for a hell of a lot more. Our target was actually 1.1191. Okay, and the reason for that target, okay, first of all, the reason for that target is just because of this level right here, which is obviously, as you can see, a point of interest on the hourly time frame. Okay, so that was the reason why I was happy to take profits around the bottom of this region. Okay, now obviously, little did we know the DXY wanted to keep dropping, and actually would have provided a lot more in terms of risk reward. So why did I place this position? Okay, why did I place this position? Now you can see my point of interest here, okay, and you can see that this is also potentially refined on the 10-minute time frame. So first of all, why was I looking for this? Okay, why was I looking for this? Okay, and it's quite simple when you have a look back. And the first thing is the break of structure. Okay, so at the end of last week, we had momentum. Okay, with this hourly candle, we had the break of structure. And then what happened is we then pulled back into this order block right here. Okay, so this is our first demonstration of bullish order flow. Okay, our first demonstration of bullish order flow. We've pulled back into the order block that was created around this level here. Okay, and if we wanted to, we could use the lowest point, but it's completely up to you. But anyway, as you can see, the market has bounced off of that once we opened on early hours of Sunday night. Sorry, early hours of Sunday morning for me. Sorry, Monday morning for me. And then throughout the day yesterday, we pushed up, okay? And again, let's have a look at other concepts that we discussed. We pushed up and we found and met the liquidity, okay? Which is around this level here. Now, again, I always use the bodies normally. When I'm personally trading, I will use the bodies to associate with break of structures. But as we can see, the market then pulled up to this level, and then classic, what happens? The market grabs the liquidity from these highs and gives us an opportunity to potentially enter this market for a long position. Okay, so we've got break of structure number one, okay, here, and then we've got break of structure number two here. Okay, and this is just on the hourly time frame. Then what we've also got here is we've got the order block that was respected. Okay, and that order block being respected means that we have potentially bullish order flow. Okay, so bullish order flow potentially kicked in here, made a new high, which is exactly what we want to see when we're looking for our positions. Now, when we look at the point of interest, okay, on the hourly time frame, the point of interest on the hourly time frame is this one here, right? This is the area that becomes interesting, where we could come back into to grab that liquidity and grab those orders to actually take that market and fuel that next move in this market. Okay, so that's all I would have done on the hourly time frame. Okay, so I've marked out my target here, which is where I was happy to take profits. Okay, and I've also marked out my point of interest, and then it's a case of being patient. Now, what else can we see here that is also in alignment? Okay, the moving average. Okay, the moving average. And this is what I mentioned to you. Once you know the flow and the direction of the market, when we come back to that moving average, it's almost like the premium versus discount aspect. So once we pull back into that moving average, most likely, if we've had a move in the direction that we thought we were going to have, then most likely we have pulled back into an area of discount. Okay, so this is our leg, this is the top, and this level here, 1.1160, is where that discount begins. Okay, so this is where the reason I talk about premium versus discount as well is not only so that we can personally get value when we're buying or value when we're selling, but also because institutions and banks and the larger players in this market, they're not going to be buying at premium. They're not going to be buying expensive prices. Okay, if they need to buy their dollars or euros, whatever it might be, or sell their dollars or euros, whatever it might be, they're going to also be looking for prices that are discounted. Okay, so we've got that discounted price, which is there, anything below 1.1160, which is where I began looking at it. And obviously then we have, in conjunction with that, we have the synchronization and confluence of this moving average now as well. Okay, so multiple different reasons why we were happy to enter that market. Okay, so then what I did was I jumped into the 10-minute time frame. Okay, And on the 10-minute time frame, what I actually did was refine the order block to this level here. Okay, so I refined the order block to this level here. Now we could also have included this one, which is the previous break of structure on the 10-minute time frame, which then is potentially going to be what was previous supply broken and therefore potentially going to be creating a demand, okay, which is exactly what happened. So once we've pulled back into these levels here, what we're then looking for is our opportunity for entry within this market, okay? So we're looking for that opportunity within the entry for this market, okay? Now, the first breaker structure was very minimal, okay, very minimal for me. But because the overall hourly bias, the overall bias of DXY, which I'll go on to speak about in a minute, was in my favor, I was more than happy to look for entries. So the reason why I entered where